Hey guys, so we're back once again for another stocks by request, and in this video, I want to talk about dividend stocks. I want to talk about REIT stocks, as it was one of the more requested ones from the last video that I made. So expect this also over the next few weeks. We're gonna do more charting sessions again, focusing on technical analysis of Philippine stocks. Also, again with the goal to be able to teach you and show you how you could plot support and resistance levels, how you could interpret charts also, and give you a general understanding on what's going on in the markets, with the hope that this encourages you and this serves as a reference point also to help you and to push you to invest more, to learn more, and to prioritize your own financial education. Because I keep saying this all the time, no one will work harder for your financial freedom, for your financial future more than you. So you have to be the one to take the initiative. So before I start, also the PSEI closed up relatively up. As you can see here, there was a large green candle, but still not above the 200-day moving average, not above the resistance that we pegged over the past few videos where we've been talking about the markets. And volume right now at 2 billion is not really as attractive, not really as high. So I really believe that for us to see the markets push higher, it has to be a convincing breakout from a resistance level with volume. So we're not yet there. Let's see how it goes over the next few weeks and over the next few months. Now, that being said, let's look at some select REITs, and let's look at it from a technical analysis point of view. Now, I know a lot of people look at REITs as an asset class where people buy them and hold on to them with the goal of just receiving passive income from it. However, what's interesting about REITs is that it's something that's tradable. It's something that, because a REIT is somehow a company that gives you dividends, but because it's tradable in the market and because it's liquid, there could be a degree of capital appreciation that allows you also to be able to profit from it. And I guess one rule of thumb for those who are in it for dividends is that if the capital appreciation is already massive, more than what you can get from an X number of years of you receiving the dividends, then maybe that could be an area already for you to take profits as well. Now, I want to show that this is the highest. If you look at it, if you look at it from a technical analysis, at least from a price point of view, this is the highest, at least, of AREIT, which is the first REIT in the PSE over the past few years. That if it goes back and it revisits its all-time high, then that would give you somewhat of a 48% upside from where it is right now. Now, that being said, if the dividend yield of AREIT right now is, say, 5 or 6%, that could be already dividends that you would receive in like 8 or 9 years as well. So what makes this very interesting is that if it revisits that in the next month, I'm not even saying that it's going to revisit that, then that could be an avenue also for you to start to trade it. So it doesn't mean that you're in REITs particularly just for dividends, that you can't also profit from it if you want to trade it. Always, or you want to earn via capital appreciation. Always remember that when it's via capital appreciation, you could profit from it as well. You could profit from it as well, as long as the margins when you start selling are okay. So what I'm going to do right now is I'm going to plot certain resistance levels here for those who want to reference areas where you want to take profits from where it is right now. A couple of things that's interesting though, and allow me to zoom in as well here, is that if you look at it from a MACD perspective, MACD is already above zero, and it has been since the start of May. By the way, guys, I have little Satoshi in the background. She's eating her apples. It's July 3, 2023. She's eating her apples right now. She loves eating her apples. So if you hear her in the background, that's just her enjoying her apples. Now, that being said, since May 2023, we've seen it go above the zero line cross. As it's above the zero line cross, we've also seen some acceleration in it. We've seen some movements upward. So as you can see, zero line cross was here. It denotes a more bullish undertone, and you've seen it also start to push up for bits and pieces. What's very interesting though in that particular move is that it's not just MACD that confirmed its upward movement. We've seen it break out from several moving averages, the 20, the 50, the 100, and 200-day moving average. So what I do believe is if it stays above the 200-day moving average, and we're actually also seeing it cross the 20-day moving average, is crossing the 200-day moving average. If we see it continually push throughout this level, then I do believe our reversal over the midterm is is warranted also. And what's interesting though, and I want to point this out also, is that if you draw this downtrend here, the downtrend was pretty much broken already. So from its all-time high, early 2020, I think early 2022, then it started to slope down. But that particular movement downward was broken somewhere around February, and that's where we saw it start to move sideways. So possible notion right now, we're seeing it get out of the downtrend in front of our very eyes. We've also seen it go above the 200-day moving average. Either it goes sideways for a longer period of time, or the breakout from the 200-day moving average would cause it to push higher, and that hence the resistances that I've plotted right here. 36.57, 39.81, 44.47, and 52.42. So those are the specific resistances for a REIT. And as I zoom in right here, possible, I think, upside from this particular area would be smaller. So why am I saying this? For those who are coming and positioning here, you might need to have a longer time horizon also if you'd want to position and start coming in at that particular, or at least at this particular level as well, as compared to for those who came in relatively early when it was as close as it could be to the support level. So it's just mainly that what I'm trying to point out to everyone else. So couple of things that I'd like to mention also right now. Ideal area to come in was at the support at 31.78. We're way past that now. So either you watch out for a breakout from 36.57, then it gives you upsides of 39.81, which is the next resistance. Then another one at the 44.47 level. So those are the resistances to watch out for a REIT. Just a quick heads up, we are not anymore, and I'll say this again just to reiterate to people, we are not anymore close to the support level. For those who like to trade the range, you want it to be as close to the support as possible. The only thing that's so interesting right now is it's out of the downtrend, it's above the 200-day moving average. Let's see if a reversal is imminent for the midterm, and you have MACD also above the zero line cross, which makes it a bit interesting. Now let's look at another interesting REIT. Let's look at RCR here. So I think from the last video that I made, RCR's dividend yields about 6% or somewhere around that area, and it exhibits also almost the same characteristics as a REIT right now. It's also above the 200-day moving average. It's consolidating for a bit. It's above zero, but look at the MACD here. It's a bit flattish as compared to what AREIT actually has as well. One thing that I'd like to point out also is this. If you draw the downward trending slope right here, you see it already out of the downtrend. So we're seeing a prevailing theme, and it's not just for REITs. I do believe that this is something that's evident also in some other stocks in the Philippine Stock Exchange, that it's out of the downtrend and it's also starting to consolidate. This is the consolidatory range that we're actually seeing for RCR. The main support level is at 4.88, which we're way far from it already. That would have been the most ideal area for those who would have wanted to spot it and actually trade a very, very good range. So if you look at the range from 4.88 to 6.2, that was something that was very, very respectable. This was about 28.5%. Of course, 28.5% is not near what you could get in US markets or also in crypto, but it's still respectable. That being said, there's a smaller and shorter sideways motion right here. As you can see right here, it's close as it can be also to the resistance. You have a resistance for RCR at 5.92, and you have a short-term support level at 5.5. So a couple of things that's a bit interesting and similar to what we have for AREIT is that it's above the 20, 50, 100, 200-day moving averages. MACD is also above zero. The difference only for this MACD is that the lines are close to each other, denoting consolidation sideways with no upward push or downward push and no momentum as well. So that being said, please write this down for those who want to trade the range. Your resistance is 5.92. Your support is 5.5. From a trend perspective, it's out of the downtrend already. It's still just consolidating, but a good sign for it also though is that it's above the 200-day moving average. So write it down, 5.92, first resistance, then breaks out from 5.92, possible resistance level is at 6.2 as well. Then if you zoom out even further, then if it breaks out from 6.2, then you may act, I do believe that, look at this, if it breaks out from 6.2, it would be the first time that it would be out from this particular range. And we have not seen it go above this area since August 2022. So the 6.2 area is like a 1-year resistance. Let's see if it gets broken. Comment below if you think that it's going to get broken as well. If you want to learn more, by the way, about technical analysis, I've written books about it. I have thousands of videos about it as well, or hundreds of videos about it. And I also have a webinar. It's down below. You can check it out if you want to enroll and learn more about it in a structured learning type of environment as well. So resistances, RCR, 6.2, 6.74. Those are the areas to watch. It has escaped the downtrend. Let's just see if there's something compelling that would cause the markets to go higher. I think one thing that people need to also realize right now is that number one, how do I say this? Rates are higher. So the lure to get fixed yield with lesser amounts of risk, you may see a lot of larger money go in there versus getting almost the same amount of dividend yield with the risk of volatility and seeing their stocks also go down for the short term. So little Satoshi is getting a bit excited, or she's getting a bit noisy. So if she starts to cry, I might end this video a bit. So I'm not sure if you've noticed it also. I've been pretty much more focused on being a father. That's one of the biggest updates in my life also. And that's what I think the stock market does also. It gives you the liberty to be able to focus on other things that are important to you, because at the end of the day, it's an asset class that's there, that's existing, that will work for you as you want to also focus on other things as well. Anyway, so we've talked about AREIT. We've talked about the PSE at the start of the video. We talked about RCR. I want to talk about CREIT, one of my favorite REITs as well, for the very fact that it's exposed to renewable energy, for the fact that for 30 years, it has a 30-year lease, for the fact that it's not exposed to BPOs or even POGOs as well. And I do believe it's in a category where we're going to see more and more growth over the next few years. I do believe that renewable energy will just get bigger and bigger and bigger and bigger and bigger and bigger as years start to go by. Very interesting though, for those who picked it up and are in it for the dividends. Look at this. It dropped to 1.96 at the end of 2022. Those who picked it up at those levels have a healthy, massive dividend yield, because somewhere around this price right now, it's probably around 7+%. Remove the 10% withholding tax, it would bring you below sub 7% already. But 6+% net of taxes, I do believe is still something that's very, very attractive. Now, that being said, I think this is the one stock that's different from the others. This one is very, very clear already. You can see it. This is the downtrend. There you go, from the time that it IPO'd. And by the way, it hasn't recovered from its IPO price yet. But after that, this one has fully reversed already. From here to here, it's in a full-blown uptrend already. Very, very clear. The movements of higher highs and higher lows. We're seeing CREIT into an uptrend. We're seeing CREIT also touch the lower support area of its uptrend. We're seeing it also stay above the 20-day moving average. We're seeing it also above the 50-day moving average. We're seeing it also above the 100-day moving average. We're seeing it above the 200-day moving average. MACD is also supporting it. The moment it crossed the zero line area, late 2022, as you can see right here, it never looked back. The reversal was very, very clear. Breakout from the zero line cross, breakout from the 20, 50, 100, and 200-day moving averages. It's still pushing into an uptrend. So let's see how this will progress. But what's interesting about that is if it follows this channel, then it could possibly do this. But for that to actually happen also, it must break out from this resistance level first, it has been there already for about 2-3 months already, the 2.58 range. But after that, I do believe that if you want to see it push higher, it must attack its IPO price. It must go higher than the previous high from the time it went into the market. So let's see, 2.85, can it actually break it? So for those who are writing notes for this particular stock, for this particular REIT, 2.58 is the resistance right now, which it needs to break. It has already fully reversed from a downtrend into an uptrend. After the 2.58 level, you now have the 2.85 level as a level of resistance. So give me a few seconds, guys. The apple of little Satoshi dropped. I just have to get it and give it to her. What happened to your apple? She's having her little merienda break. Anyways, so we talked about AREIT, RCR, CREIT. Let's talk about MREIT as well. So if you put MREIT into the mix, there you go. It looks almost similar to majority of the REITs that we've talked about. It's above the 20, 50, 100, and 200-day moving average. MACD is also above zero. If you zoom out and you try to get greater context, you can also draw your downward trending slope right here. And then what's interesting is that as it started to break this, it pushed up, broke it. It has broken out, but it's now still starting to consolidate. I do believe this is the range for MREIT. Please do write it down. 13.6 support level, 15.87 resistance. It's above the 20, 50, 100, 200-day moving averages already, and MACD is also above the zero line cross. So if you want to see MREIT push higher, which I do believe from a reversal standpoint, it's similar to the other REITs that we have. It's already, that's why I want to say this also. That's why the dividend yields have been lower, because as you can see, it's no longer at its bottom. It has already started to reverse from the downtrend. And from a price movement standpoint, I do believe it just has to break out from certain resistances. As you can see, similar to CREIT, similar to RCR, and similar to AREIT, it's currently stuck and it hasn't broken out from a specific resistance. So that resistance, at least for MREIT right now, is at 15.87. The next possible resistances to watch out for, at least for MREIT, is you can see one right here at the 16.9 mark. Then you can see another one here at 18.51. Then you can see one right here at the 22.63 area as well. So there. Do let me know. Oh, I want to end it with this. Let's look at DDMPR. At least it's the second REIT that came out in the Philippine markets. What makes DDMPR a bit different from the others is that if you try to plot your trend line here, it still needs to break out from this downward trending slope. So MACD is still below zero. It went above the zero line area a couple of weeks ago or a couple of months ago, but as of this recording, it's still below the zero line area. It still hasn't broken out from the downward trending slope. It's still below the 200 and 150-day moving averages as well. So I think it's a bit different from RCR, from CREIT, from MREIT, and AREIT, where those REITs already have started to break out from their downward trending slopes. For the DMPR, it still has to. So let's see how it goes. But I do believe if it breaks out of this downward trending slope, then we may see some price movements similar to how the other REITs have performed as well. So if you want to peg some resistances also, I think one resistance that needs to be broken out is 1.465. And then your main support level right now is around the 1.17 mark as well. So it's consolidating those short term. Allow me to zoom in first. But please do remember 1.465 resistance and then 1.17 support. And then this is its current downward trajectory as well. The reason why it's doing that also because it got rejected here. So I do believe that if you want to see upside, if you want to see DDMPR push higher, it must break out from the 1.465 resistance level. And let's see if its current downtrend also will make it retrace back to its main level of support, because this is a tradable range too, right? So if it does this, goes there, then you could pick it up from a support level, especially if it bounces, then that gives you a 25.9% trading range. And once it starts to do that also, I do believe for the first time, should it happen, I don't know, let's see how it goes. And that's what technical analysis is. It's not a crystal ball. It allows you, if it finally will break out also of the downward trending slope as well. And then that's what you could possibly trade. 1.17 support, 1.46 resistance. Then suddenly also it's above the 200, 150, 20-day moving averages as well. And then you have it challenge again the main resistance. So there, I guess that's it for now. I hope that this was something that was insightful for all of you. If you stayed up until the end, if you like videos like this, like, share, subscribe, and smash the bell so you get updated every time I come up with new content about the stock market, investing, trading, and everything else in between. If you guys want me to talk about other stocks as well, put it in the comment section below and I'll do my best to be able to talk about that in the next videos. So that's it for now. Marvin Germo. I hope this video helps you trade well, trade strong, trade smart. See you all again soon, and God bless you all.